The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. Second time today. I had the pleasure of being with Tommy Jr. at the 10 o'clock hour. Tom had to be out for that hour, so I was a guest, and it's always a pleasure to be there. Nice, fun show. So we're looking at the Dow down 83. Whoops, this is the E-minis down 83 cents at 24.96. I want to talk about these chart formations. Oh, there's the ESU. I wonder what was wrong with that. If we're done with ESU, this is ESZ, December. The breakout that we saw this week, a continuation of last week's acceleration to the upside, is essentially saying to me that the short-term top that I'm anticipating in the next few days, based on the daily chart, and it could just be short-term, I don't know, it could be more, is really going to be dependent, because the daily chart is the rudder. Of course, the 120-minute chart is the shorter term, but let's call it the daily chart is the rudder, the directional rudder for the weekly. A lot is going on here that I really want to pay attention to, and I've tried my very best to try to isolate my thoughts, my inner emotions from what I'm looking at technically. And because it's a mixed picture, and what do I mean by a mixed picture? Look, you see this weekly chart of the E-mini, this is the December contract. You see the way the stochastic right there is at 81%. That's good, and that's really confirming the rally, but it's really not saying up in the 90% area it's a fantastic rally. This is 81%. It's good. It's what I like to see. Rallies above 80%. Not the issue. The issue is the MACD is attempting, after being very negative, attempting to cross positive, and it's only Tuesday today. It's not even Wednesday, halfway through the week. I had to double check. It is Tuesday, right? But the MACD is very close to turning positive. This is the point where if it deflects lower because the price is pulling back, that often means you've got at least one or two bars, doesn't matter what the time frame is, of downward trajectory. And if, in fact, it crosses positive, it means you've had a verification of, in this case, the all-time high. You've got a verification because the stochastic will be over 80%, probably at about 83%, maybe 80 to 83%. And the monthly then continues higher. So here I am in a very difficult, but nice position, but it's a very difficult one because on the one hand, I've got cyclical aspects that are coming in that suggest that this is the very time frame. And if I just do this very quickly, I'll show you what I mean. If you go to this chart right here, look, this is the Dow chart, very long-term chart. What was support all those years going to the 2007 top, what didn't even become resistance because we never even got there until last month on the way back after going all the way down to the Dow 6500, 60 actually, the 60 right there, 64, 69 low, back in on March the 6th of 2009. So I wanted to just take a moment here to explain that it isn't just a case of saying there are slightly cyclical aspects to it. There are time sequences. It is the way the technicals are performing right now that suggests to me that I want to remain in the long position as long as possible. But I have to take note that for the first time, that's very long-term. And, you know, when you're dealing with a long-term trend line, one little fraction, 1 degree can set you off a great deal by the time you get to 10, 12, 13, 14, 15 years later. So that's a difference. But I am saying this is the first time we've got even close to the Chapman Wave inside track monthly up channel resistance. and we've taken it out. Last month we stopped at that resistance. This month we're already above it. But the very long-term 2003 low, 2003, this is not 2009. Sorry, I should have mentioned that. This is the 2003 low that I'm taking the trend line from. That is different. That is taking us all the way to showing that we've just broken out, but the month isn't finished, and you cannot look at a candle until it is completed. If it's a 1 minute chart, wait for that second minute to conclude the first minute. Now you can be on to the second. So all I'm saying is that up until now, this has been very strong action, very strong reaction to whatever is going on in the economy. Now look at the daily E-mini in legs C to the upside. Chapman wave, you always look for D's to start putting your foot on the accelerator. I've taken off the accelerator, put it onto the brake or hover above the brake. But the MACD is very strong. The stochastic's flattening at 97%. And the on-balance volume is only in leg 2 to the upside. This is really unusual. So now let me show you something else. If you go to the Dow, now I'm going to go quicker. Dow is in leg C to the upside in the daily. Leg E/B in the monthly, and it's in the weekly, and it's still not up against the 22,000. What was that number again? 22,460 strong resistance in the trend line, and the I don't want to do the 120 right now, but the monthly is still very strong in leg E, and the MACD and stochastic are all improving, and the on-balance volume. But wait a minute. So that gives parameters right now. 22,170 is the 9-period moving average key support. And then, as I said, 22,460 is on the upside. Hey, wait a minute. The diamonds, the Dow diamonds aren't. They're in leg D already. This is a very unusual situation. And often is a situation that I get when I'm getting close to some kind of a short-term top. So I'm keeping that in mind, as well as the fact that for my subscribers, we have 9, I must count them again, 9 long positions. I don't like that, because whenever we get to 8 or 9, we are really close to a top, whether they mix long and short or whatever it is. In this case, they're all long and they're all up. Some of them up a really nice percentage in a short period of time. I'm kind of nervous about that. It's a nice problem to have, but it is a problem. So I'm trying to deal with it. And I'm saying, look, if the stochastic holds flat at 97% in the Dow diamonds, the S&P, SPX, the S&P leg C, this is a leg C. It makes a peak, it extends leg C if it goes above 2508.32 today. If it doesn't, that could be, in fact, a peak C. But the SPY, and here again you've got a divergence, has made a peak. I don't know what happened Friday that it pulled back like that. Now you've got an island reversal to the upside in a way that's kind of positive. It says you should go to 250.33 for leg D. And this is at 249.98 right now. And the QQQs have been kind of stalled, and they're still stalled at 145.92. Just like the IBB. Who ever heard of the IBB staying stationary, basically, for 4 weeks? 3-4 weeks. Amazing in the same trading range. However, this is going to be the issue. Gold. Gold is up $1.80 at 1312, 1312. It is in a sell signal to sell mode in the daily, but the weekly chart is still holding pretty darn well. I want to talk about these things as well as the TLT, which made a peak T and is pulling back sharply. Rates, I believe, are going higher. Yields are going up. Bonds are coming down. Gold is coming down. Silver is coming down. Crude oil is holding very well, and the market is still moving up. I'll be back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member, FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, Ron. So I had a question about platinum. So in my CD, introducing the Chapman Wave CD book, introducing the Chapman Wave methodology, chart analysis in the stock market, if you go to chapter 17, there's a chapter called the dreaded H pattern. Why is it dreaded H? Because it looks like a lowercase h, and when the price on the right side breaks under that left side low bar, it's not good at all. It just keeps going down. So what does that mean? That means that in platinum, we've got a pattern that had a very large A formation, uppercase A. It goes all the way from the low back in 2016, continuous contract was at about 825. It goes all the way to right there, August 2016. It goes to 1210. So that's, what is that, it's 48 or something % gain. Pulls back, but doesn't hit the left side low. But instead it makes another arch. It makes an arch instead of the inverted V, the inverted V-shaped pattern. It makes an arch formation, like a lowercase h, and then it makes another little one. And now it's starting to make another one. So these patterns suggest that there is internal weakness because it hasn't broken to a new recovery high. That would be above the high that was made week of 3rd of March of this year at 989. 1,053. Now it's trading at 950, down 10. And I'm looking at it and I'm saying, oh, that monthly chart, it just couldn't break out to the upside. It couldn't even break above this one left side low of March. So this high of March. So this is not good. And it suggests that if platinum breaks 941-ish to 938 support in September, that's just not going to be a good sign at all. And then I have to think of it more economically, that it as an economic barometer, because platinum is used in many industrial aspects. So this is just saying something unusual is going on. Look at high-grade copper. High-grade copper is up a fraction at 2.97, but it made a peak E in the daily chart. In the daily chart, peak E, and it made a peak D so far in the weekly chart and a leg D in the monthly, and that suggests we've got to watch this real closely, because if copper goes back up to about 308, that's good. But if it breaks down and goes to 2.88, that's not good at all. Okay, now let's go. I want you to talk about a couple of other things. You've got crude oil kind of stalled, down 32 cents at 50.03. Right in the 200-period moving average, but so far it's held quite well, except, you remember the pattern we just looked at? This is in the Chapman Wave. So what are we looking at? We're looking at this pattern where price comes down, tries to rally, and forms an H formation and takes out the left side low. Does it again, and does again. And at some point, you could get this pattern that says lowercase h goes to a lowercase m, and then you can get the worm pattern that it just keeps doing that. And then you're going to get a test of a break to the downside. So what I'm looking at here is, you remember the pattern that we looked at for the EURUSD, for the euro-dollar contract? I made a big deal. I drew it in, and I said, hey, this is what we're looking at, and this is going to be very important for the euro-dollar. Does it break to a lower low? And then the MACD and stochastic are very positive. So if it breaks out from the H to an M pattern, lowercase h to lowercase m, and then you get a successful buy signal, there's a monthly chart, that can go, if it closes at any point above the previous left side arch high, in this case 1.171 back in August of 2015, that should go even higher. And what would be the target? I said the 200-period moving average of 1.218 is where it should start to be repelled. That's kind of a magnet and then a repellent zone. And here we are in a peak G/C in the weekly chart, above the 9-period moving average, way above the 200-period moving average. The 9-period crossed the slower 200-period moving average. Usually you can go a little higher, and then you start to chop. While there's a digestion of that move, the MACD is flattening out. Stochastic still good at 88%. So the euro dollar is actually holding quite well. Currency pair. The USD JPY, this is the Japanese yen, has had a spectacular move, going from the 107s to the high of 100. What was the high today? 111.87, almost 112 in a single move, leg A. So that says to me, now we've got key support at 110.30s and 50s. This is the 9-period moving average of the daily and the monthly and the weekly. We'll see what happens, but I've been wrong. The dollar, I know there's not a direct correlation, by my analysis of the dollar, said the dollar should rally, and it should rally into the 93s, the high 93s. No, it's at 91.88. You can't get out of its own way. At peak A, and then it stalls. Peak A and it stalls. It just keeps doing that. So the low of 91.01 is going to be absolutely key. At this point, I still think gold and silver and bonds have a little further, and copper and platinum have a little further to go to the downside. I'm calling this a retracement in the other area. So that's the TLT, which is fading. But look at the TNX. If we had to go to one particular 10-year in leg B to the upside, holding really well. But until the 10-year, which is at 22.38, can break decisively, there's an A right here, gray A, because it's under the previous highs. Until it can break decisively above this downtrend line, and that's all a downtrend line is. It could have been a doji candle or a gap. It's just another icon that you look at as a particular focal point. And until this trend line resistance at 2260 is broken, we're at 2238 right now, 2.238. If it can be broken and you go to 2270, 2.27, that'll be very positive in the short term. Okay. So now let's just do a couple of other things. And what have I forgotten? I've gone bonds again. Everyone, the questions came in. Oh, XLF. Yeah, XLF is today up again. Huge move. Only up 18 cents at 25.24, but a huge move from the low that was established back at 23.79 on the 7th of September. Nice move. And look at the weekly chart improving. Probably a C, and it's going to go to a D. Monthly chart improving. So, and we have a bank stock which is also doing fabulously here. And the reason is, when I identified that the yields could be going up, bonds could be going down, I immediately wanted to jump into the financial sector. Not because there's an absolute direct relationship, but there has been. And as long as there is, I'm going to stay with it. Oh, question in the den. TYX, which is the 30-year. Yeah, this is in leg B. Here's your trend line. It's the same sort of thing. So if you're dealing with the 30-year, although for all practical terms, it's the 10-year that does all the work. That's how they, mortgage rates and all sorts of things like that. This is the same thing. So at 2.808, you want to see the TYX. Now, that's going to be the big test. There's 2841 as 200-period exponential moving average resistance in the daily. But the MACD is flat, is accelerating higher, and the stochastic is flattening out at 85%. So I don't know what the Fed, I don't know what they're going to do, but all I can say that might impact what goes on. But if the rate goes to 2820, then that 200-period moving average of 2841 will become a magnet. And if it fails and goes under 2770, it says, it's just a bounce, and gold starts to rally, everything starts to rally again. As the market might get very, very choppy. I'll be back. Basil Chapman, Tiger Technicians Hour. A lot of questions, and I'll get to them. Oh, interesting questions. Okay, I'll get to them.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 43. S&P is up 3.5. I mean, give me a break. A couple of days after options expiration, you should have a down day. Well, the day's young. You never know. I was expecting today to have a smallish candle with a slightly weaker close in the Dow. Well, so far, just every dip has been a buying opportunity. I don't mind. This is real long, but that's the issues that you expect. You expect some discipline from the market. All right, so we're looking at Goldman Sachs question. You know, there's a W for a double U formation, like a W, that's forming two cups in the base of in the weekly chart. And all I can say is I was expecting Goldman Sachs sometime later in maybe October to really pick up steam and in the final quarter of the year to become a leader. Maybe it's already started that, so we'll see. Now, so this is what I wanted to mention. The discrepancy that I'm starting to see in some of the sectors, some of the stocks within the sectors. I love the leadership of the financials. I love when the financials are leading and the market actually moves high. And of course, the Dow has 5 financials. I love also when you've got the IYT. I'm going to get back to Goldman in mind. I just want to mention Goldman should participate. It's up $1.51 to $2.29. If it breaks above $2.35, but by Tuesday week, no, that's really too much to ask. If it breaks above 231.50 to 232.20, that'll be very good action. And then we can expect that this is going to be a second cup and that any pullback could have some points to it, but it should hold the 220 level. Not bad, 9 points from here, 9 points from here. So let me go back to what I wanted to say. The IYT, and I had a question about the airlines, in a peak E right now, if there's no new high. The MACD is good stochastic. It's really strong at 92%, but it is pointing down, but still very strong. We've got the weekly chart, not really confirming the breakout in the daily, but in the weekly chart, it is just right now at 1.58 and 1.67. It's very close to crossing positive, and we're only Tuesday into the week, so anything can happen. But if the MACD crosses positive and the iShares Transportation Average ETF, the IYT, trading at 171.23, down 49 cents, if it's able to squeak into the 172s by by Thursday afternoon to Friday, somewhere in the latter part of this week. That's going to be very important. I like the fact that it did rally with the market. Now it's sort of stalling. I want to see the MACD cross positive, and I wanted to see it. I want to see it for 2 weeks, not 1 week, and that'll be very good. All right. Meantime, 169 is really important support, and a breakout occurs above 173.50. All right. So now let's go to question is Goldman Sachs. We did. LAZ is Lazard, as I recall, Lazard Frere. There used to be Lazard Limited. Nice leg B in the daily, leg A, gray A in the weekly, having held the 200 period, having not tested the 200 period moving average of 40.30. LAZ is trading at 43.20, up 75 cents. The monthly chart has gone to an A, B. This is a leg C, a peak C. So far, it's acting very well. But my eye says that if there's a lot of resistance coming up between 43, what is the height today? Between 43.50s and 43.90s. If it breaks above that, if it goes to 44.20s, that's very good action. If it stalls here, watch the 43.20, watch the 41.95 support. A close under 91.95, 41.95 would be very negative. Right? In the meantime, it's acting quite well. If you're thinking of going long, you could go long right here. I would have a 1.25 point stop on a position, starter position. And you'll know very soon if it's going to work. Okay, next question is the XAL is the airlines. Not very good. It looked great in terms of a recovery just 3 days ago. Then you got the lousy candles. And the weekly chart would have looked very good. And well, the week is young. If it can close at 106.16, down 43 cents. If it can close Friday above 107.37, that would be very nice action. Closing under 104.70, very poor action. And just at the IYT. Next question I got is RAD. I did that with Tommy earlier on in the other show. Made a peak D. They are being taken over by Boots. What's it? Walgreen? No. WAG. WAG. I can't remember. Walgreen. Yeah, I think that's Walgreen. Anyway, so RAD is done. There's nothing to talk about. It is done in many ways. And the other question I had was BBY. Now, that's a very interesting thing. BBB, down 4.7 at 52.63. You remember it had that gap down after a peak D. Remember how important peak Ds are? Peak D in the daily right here at 63.32 on the 24th of August, and then it kind of falters for 2 days, then kaplop. And then it rallies really nicely, cannot fill the gap, and kaplop, another one. Testing the 200-period moving average of 51.62, and the weekly chart has gone to peak F and pulling back, and the monthly chart is in a leg F. Now, I have to tell you, I've spoken to a couple of people. I've done it myself. I went to Best Buy. I got a TV, but for the very first time in I don't know how many years, this is the larger kind of, not a very big, but larger. And most importantly is I went online and did a whole bunch of things, but I wanted it set up. This time I wanted someone to come in and just do the setting up for me. I got tired of doing all the other stuff. So I went to Best Buy, and they kind of price matched a little bit. And then they said to me, if the price in the next few days goes down, come right back and we'll refund you. And they did that. And prices have been going down. So I think that Best Buy serves a purpose, and maybe it serves a purpose for fuddy-duddies like me who are getting lazy and don't want to do all the setup and everything, even though it's really quite simple. But I got a feeling that there's a place for them. I don't think they're going to fold. But Toys R Us, it was in a different kind of a business, and they got hit. They're folding, or that's the bankruptcy proceedings, whatever it is. They were doing the wrong thing in the wrong area. I think Best Buy, in many ways, is doing the right thing, but it could be the wrong area. So we'll see what happens. But most importantly, it had a spectacular move from the low of 2016 in the 25.31 area. January of 2016, it rallied really strongly all the way to the most recent high last month of 63.32. That's really good for a 1 year, 1.5 years position. And that, I think, I don't see any reason why it doesn't pull back. My biggest qualm is that if this is a peak F in the monthly, you've seen a hat-trick top. I think that it's going to be something more serious if that's the case. And if you look at the RTH, having made that big W formation, we'll talk about it when I get back. Trading down 49 cents at 81.20, maybe hurt by the retailers today that got smacked. We're going to see what happens here, because it's a very important fact. I'll be right back. Basil Chapman, Tiger Technicians.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman. We're back. Dow's at 41, S&P's up 3. I wanted to look at this pattern. This is the RTH. This is the Market Vectors Retail ETF. It has Walmart, Home Depot, Amazon, CVS, Lowe, Costco, what is that? McKinsey, MCK. Yeah, I think that's the Spice. No, it can't be. Let me just see. MCK. Just slipped my mind right now. McKesson, of course, McKesson. Okay, so we were looking at the RTH. It has Target, TJ Maxx. It goes on and on. Staples, BBY. No, Staples has been taken over. So it has BBY and BBBY, Best Buy and Bed Bath and Beyond. So this is the W formation in the RTH. But the difference between the one that I showed you and the one that we discussed in detail yesterday, which was triple M, in the weekly chart, is that this went to a lower low, and that makes a difference. Why? Because here you've got higher highs and higher lows. There you've got, in this one you've got lower highs and lower lows. So that makes a difference, and what I really am looking at, they're just numbers, is gap down, and that says that the MACD is turning down, still good, turning down, the histogram strong, but the stochastic is at 85%. It was up in the 90s just recently. So at 85%, it's getting closer to pulling back. So if it can hold 83% this week, or even not go lower than this 85, and there could be a gap up tomorrow, that's going to be very positive. No, that's going to be a positive. Very positive is a new recovery high, and that means that it goes above 82.73. Then I'm looking, actually not good enough, 82.54, 82. Oh, I didn't see that. Aha. We're not making lower lows and lower highs. We're making lower lows. This high is just fractionally higher than that. That's important, just as this low is lower than that, and that's important. So what you've got is a slightly expanding wedge. This is okay. Now we've got something to go on. That says very clearly that the RTH becomes extremely negative, 81.20 right now, if it closes under 80.32, somewhere around 80.32, about a point lower. Let's make it 80.20, just a point lower. Closes below that, it says, no. We're going back to the 200-period moving average of 79.76. If somehow there's some kind of moderation of today's weakness, and tomorrow it closes in the middle of this range in around 81.65, 45, 50 cents higher than it is now, that'll say good action is going to save the stochastic, make the MACD start to flatten in the green 9-period differential. That's the faster moving average, and that could be a positive. I don't want to spend too much time to say, very simply, in the RTH trading at 81.20. A close above 83.20 is very positive in the weekly, daily and weekly, and helps the monthly. And a close any day this week, but especially on a Friday, below 80 point. I'm going to make it 80.20 would be very negative action. No, I shouldn't say very negative, would be negative action. Very negative action would be under 79. Okay, got that out the way. Good. Question about, is 2017 comparable to what year? Oh, no, question. 2017 is comparable to what year? Ooh, I have ideas, and I know the person is referring, at least I don't know, I'm guessing the person is referring to in what year. Was it a year of or just before a major decline? And my answer is, in most of the major declining scenarios, the sector rotation didn't work enough to have high-level consolidations. You had earlier than that really serious 8, 10, 12, 14, 16, 18% declines, not these miserable little 1 and 2% or 3% then go to new highs. So this is different. Now, I love when people say it's different, then they roll their eyes and say, yeah, we've heard that before. It is different this time. The whole thing has been different. We've had the Fed. We've had low rates. We've had international disturbances that turn the United States of America into a favorable, no matter what people are thinking in any other terms, whether it's military, socioeconomic, political, I don't care. The reality is that this stock market has been the viable market. And yes, you've had EEM, you've had some fabulous rallies. Look, the EEM right now, new recovery high, not an all-time high. Ooh, not an all-time high, huh? Oh, all-time high was way back. I thought it was higher. Yeah, it was back in 2007 at 55.83. We're at 45.70 in a huge leg to the upside here. And this is a leg C in the monthly chart. Still very positive. The last one was a C minus and failed. This is a C and it's working. It's not even above the high of 45.85 that was made September of 2014. This one is 45.96. 45.96. Aha! 11 cents higher. Yes, it is higher. So this is a blue C. Keep it in mind. So that's a monthly. The EM, the emerging markets, monthly is still very positive. Question, Greg, Basil, could you look at CGW? CGW. Oh, the Guggenheim S&P. Okay, this is the right here. The Guggenheim Global Water. Thank you for reminding me. I completely forgot about it. We have in my newsletter. We have a water stock, water product stock, and it is done very nicely. Let me just put this down. This is CGWC, not G. CGW Water ETF. Great. I was looking for one and then I completely forgot about it. Woohoo. Nice. Yeah, it's doing very well. So let me do this. They've got a low. I always do that. Yeah, 24.50, 24.54. Great. So that establishes that was the low. Yep, that was the most recent low. Back in July, August of 2015, it goes to an A. It goes to a B. It goes to a C, and then it goes to a D. Yep, so it's in leg D in the monthly, still very positive technically. The weekly chart, of course, you gave me one here. That's not so easy. If I got a break coming up, I've got a break coming up. I'll do this during the break. I'll just show you what we do. In the Chapman wave, you look for the most obvious low bar. Then you peruse the stock and you're looking for peaks. There's your first one. A, you label it alphabetically uppercase on the way up. A, B, you're looking for a D. What happens at a D? Double check, because you know you can always miss things. So that's 32.50, 32.50, 32.51. There's your C. That's why I had to redo it. I could see that there was some very closeness there. D, and then what happens is it goes to an A and a B and a C. Water, CGW, trading at 34.48, up 9 cents. Thank you very much for bringing it to my attention, Greg. This is acting very well. The weekly chart is strong. The monthly chart is in D. I've got a new buy mode in place for the weekly, and that's in a leg C. I'll do the daily when we get back. It's worth observing what this is doing. Good. A, B, C, D. Okay, I'll be back straight after this Basil Chapman Tiger Technicians Hour, and we've got the Dow 47, S&P up 3 and a quarter, 2.5. Right now.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve coming up after this. Now, I've just done some homework on Chapman Wave methodology right here on CGW. This is S&P Global Water Index, and it's in a leg E with the MACD very strong and stochastic very strong. There'll be a change in trend if there's a close below 34.48 right now. If there's a close below 33.70, no, 33.50. I want to give it room. Then I'm going to say it's made a short-term top. But at this particular point, it's getting close to one, but I haven't officially got any short-term top in place, even though it's in a leg E. So where would I add? Let's just make it real simple. If you're in and you're in at 28, you said you've got 6 points. I hope you can keep that as a core position, because the water, I think, is one of the sectors that's going to continue to do well. I'm going to suggest that you hold off. Just email me or text me in the den next week. I don't want to do anything right now. I would be thinking of adding between 33 and 32. But I've got a feeling that it's that 33.70 9-period moving average in the weekly chart that is going to be so important. So I'm just saying, hold off. You will get an opportunity. If my eye is correct, by the first or second week of October, you should have a really good entry point. If there is a pullback at any stage before then, below 33.70, then I think you're going to look at this, and there's a chance that it might retest. It might. 32.11 was the low of the 7th of July. I do one step at a time. Let's see a close below 33.70, and then we'll start looking to see where would you enter another position. But congratulations on a fabulous entry point already. So now let's do this. We're running out of time, and I just wanted to get this out of the way. So first of all, I want to look at the VIX index, the VIX, and this I'm watching really closely because this, I think, is going to be the tip-off for me. If the VIX at 10.14 later in the day is closer to 10.50, then I'm going to say, hey, even though it's in a leg C, we're getting very close to some kind of a pullback. If the VIX, in fact, pulls back and closes under 10, I think we've got another couple of days to go. But that VIX is going to be really important. In the meantime, for those of you celebrating, tomorrow night starts the Jewish New Year. Happy New Year to you. I'll be back tomorrow. Have a great day. Stay tuned for Steve and all the other great hosts. We've got Steve coming up, plus Dave and
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.